Good evening, folks. This is Doc for ReadySetCrypto on behalf of our traveling reporter, Mav, who is out in New York City covering the Consensus show as well as perhaps picking up some awards at the Crypto Influencer Conference. We'll start out by looking at Bitcoin here against the US dollar, and right now Bitcoin is getting drilled once again versus the US dollar as it's down 3% just today, which in most markets would be an extraordinary amount to be down in one day. 3% is a huge day, but in the crypto markets, it's just another day here. Now we have to keep in mind that just to keep things on check here, if we go out to the weekly chart, we can see that we're still in this weekly downtrend. 2 weeks in a row now, we're pulling down. We are in a series of lower highs and lower lows. And again, this needs to happen. We have to have this happen because we have to basically get people to say, well, there's no future in this, and wash out. We have got to get capitulation before we're going to have our eventual relief rally, which is also called the disbelief rally. The reason it's called the disbelief rally is because nobody's on board for it. Nobody believes it when the market rallies because they've just been wrecked. And this happens over and over and over again, regardless of what market that you see. Now, if we go back in time here, here's the rally that we had in 2013. So the 2013 Bitcoin rally was enormous. And then from there, we started to sell off a little bit, but you can see the same type of pattern as we get into 2014, 2015. We had this series of lower highs and lower lows, lower highs, lower lows. This, again, is the weekly chart. So this ate up a lot of time as we got into 2014 and then eventually 2015. So this took all year to keep on going down. And then finally, as we get into 2015, we went sideways for a while. And then we started to see the very first hints of the recovery as the price prints a new high. So that's a higher high down there. And that was around July of 2015. And then look at this. Just to get everybody to remember who's boss, the market prints a lower low. And this is where we have everybody wash out. Look at the volume down here. Look at the washout volume. This is where people say, I can't take it anymore. There's no hope. This is it. And this is the capitulation point. Now, we have not reached this type of volume yet in our current market. Now, notice the rally that came from here. Here's the disbelief rally. And I will take this back. It does appear, based on the volume, that a lot of people were on this rally. Perhaps there was some catalyst back then that drove things, but you can see that from this point, again, disbelief, a lot of people did not jump on this rally for quite some time after that, as they were all burned back then and said, one bitten, twice shy, I'm not going to do this again. And then, of course, we know how the rest of the story is. So now, as we compare that whole move versus where we are, that gives a little perspective, doesn't it? Gives us a little perspective in terms of where we are and perhaps where we have to go yet before things are going to finally wash out. Now, we all have optimism. We all feel that there is potential for this market. We certainly saw a lot of that into the end of 2017. But quite frankly, we've got to wash out a lot of people. We've got to make sure that everybody that jumped on board here finally washes out. This is typically when we do see the bottom. Oh, and by the way, a little bit of revenue actually coming in through the crypto space would not be a bad thing. Okay, part two of this video, as I pull up the screener to see what's moving, and quite honestly, there's not much moving to the upside. So I wanted to take a look at the other side, what's moving down right now. And notice this, if we do a little bit of trend analysis, we see a lot of correlation here. There's a lot of coins that are using Binance Coin as the reference currency. Okay, so that should tell us something. Right now, Binance Coin is the reference currency. We have a lot of currencies going down. So that tells us perhaps that Binance Coin is going up. So let's ditch the screener. Let's go and take a look at Binance Coin. And look at this. We have Binance Coin trying to break out from this symmetrical triangle pattern. So here's a lesson when it comes to currency pairs. If we are going to trade something based on Bitcoin, So whatever is in our numerator, let's just say that we have something like Cardano. And if we're going to trade that versus Bitcoin, so if BTC is in our denominator, if that's our reference currency, then sort of what we want to have happen, you know, you can look at this reference currency and say, well, it's just a reference currency. It's just what I buy it with. But don't forget that this can go up and down as well, too. So if we buy into this pair, what we want is to see our currency that we're buying, in this case Cardano, we want to see that go up or at least stay stable. And then we want to see our reference currency stay stable or go down even. And in this case right now, it's actually a good idea to use Bitcoin as the reference currency because right now it's dropping in value, as we've seen. However, just about everything else is dropping in value too. So if you do have that rare combination where you have one of your reference or one of your coins actually going up in value, in this case, like this one here, and so this is why it's getting such a big bump, is because the Binance coin is being bought with Bitcoin. So this brings on the whole topic of stable coins. And so I think the whole idea of stable coins is getting better and better and better right now. There was quite a lot of FUD earlier this year on Tether, which was supposed to be tethered to the US dollar. And there's some questions as to whether or not there's true linkages to it. And then what we saw recently was, and recently we've seen coins like this, like the True USD is showing up. So True USD versus Bitcoin. Again, this is all, you know, just a straight line down here. Or True USD versus US Tether. So that one should, again, be a straight line. It's going to move around a little bit. So you can see this is kind of pegged to the dollar, or pegged to Tether, which is supposedly pegged to the dollar. So True USD is supposed to be pegged to dollar-backed reserves, so that should help this. And what this means is that we could have a better stable coin. So ultimately, at some point here, we're going to be able to, you know, buy something, whatever coin that we want to buy, and we're going to be able to set it up versus, you know, some stable coin in the denominator here. So we're only going to have basically the effects of the numerator here. The intrinsic value of the coin is what we're going to be trading, and not necessarily also trading the effects of the denominator, which to this point has generally been Bitcoin. Or if you're trading on something like a Gemini or a Coinbase, you can use the US dollar, which has got its own movements, but certainly nowhere near as much as something like a Bitcoin does. So folks, day by day, piece by piece, inch by inch, this space continues to get incrementally ever more mature, although it's happening at a very, very slow pace, it seems. But, you know, honestly, when you look back on the growth and the progression of this space, this crypto space versus other technologies, look how long it took all these internet technologies to really catch fire. I mean, these things were around. You know, I was installing my first IP stack back in 1994, and then, you know, finally here it is decades later where things are finally now being accepted. Crypto space is catching mainstream much, much faster. So the adoption is much, much faster than anything that we've seen before. All right, guys, that is it for tonight's report. We will catch you this weekend with the weekend edition, and hope to hear from our roving reporter, Mav, on his activities in New York. We'll look to that. Thanks again for listening. We'll see you.